on the economic outlook. Clifford Bennett from ACY Securities joins us live. Clifford, are we expecting any fireworks around 2:30 today in terms of the Aussie when the RBA releases its statement?
Good morning. I think there is potential there. There's certainly a fuse lit. Whether it gets to the fireworks or not, I'm not quite sure. I mean, the RBA is now behind the curve in one regard, in that we don't need bond buying program at all. It shouldn't be there, and they should just stop it. But obviously, that would certainly surprise the market a little bit too much. But I think we should see further talk in that direction. On the other side of the argument, of course, the Eastern Seaboard is a closing, could be approaching another sort of simultaneous lockdown in all three states, but certainly Queensland and New South Wales at the moment have problems. And that is a reason for the RBA being patient on unwinding all the stimulus measures it now has in place. Because, the combination of near zero interest rates, really, that's what we have in Australia, official rates, and a bond buying program is really too much for an economy that has seen a strong return of employment and was generally strong, albeit on the back of a lot of stimulus measures. So there has to be some talk in today's minutes and today from the RBA about reducing those stimulus measures.
Okay, but many in the market think that they will now delay that taper of the bond buying program. Why do you say that there shouldn't be any bond buying happening in terms of the RBA?
Okay, because Australia has probably had one of the highest stimulus per capita efforts in the world, and we've had the lowest actual COVID cases. So in other words, the real pain to the economy has only been during lockdowns, and then we've had over-stimulus to make up for that, which has led to this rather phenomenal economic growth recovery in the aggregate data, but it's masking underlying economic issues, to be sure. And we can't just say if we have lockdowns, we should have massive stimulus from the Reserve Bank as well as the government. So it's too much for the economy, and hence we're seeing inflation. And one of the reasons earnings season is going to be so strong is because companies now have freedom of pricing, which they haven't had in the last 15, 20 years. Globalization price pressures have vanished overnight. And so this freedom of pricing is what is going to see strong earnings. But it's kind of like a false dawn, really, because the inflationary pressures will eat away at consumer buying pressure going forward. That is a reason for stimulus. I'm just saying it's too much from the Reserve Bank, given what the government is doing.
Okay, but there are calls for the government to do even more. What's the danger? I mean, what's the real downside if the RBA continues with its bond buying program? Because we've heard many times through this pandemic, with all of the uncertainties surrounding Delta, that it's better to do too much and live with no regrets than too little.
I agree with that totally, and I was a supporter of that. But I think we've already done too much. We've done too much again and too much again. I think there should be a targeted stimulus response or effort to support small businesses and hardworking families that are really bearing the brunt of these lockdowns. That's a definite. The federal government and state governments should be doing that. We are seeing that. Should they maybe do more? Maybe yes. Should the RBA be doing everything it's been doing as if we've had the situation of the United States economy of massive deaths and hospitalizations, all that sort of thing? We haven't. The RBA, seeing what the federal and state governments are doing, should be backing off a little bit. So I agree we should do too much, but too much is overdone.
Okay, so Clifford, what else are you thinking about these days in terms of economics? What else is front of mind?
Obviously, you've already mentioned on the show that, the ISM in the data in the US yesterday was bad. That's just, it wasn't bad. The absolute number was good, but the trend is very worrying. And we're seeing that roll over in all the economic data series in the US. The US economy is coming back to a new normal, which is about where it was before, but maybe a little bit lower, which makes you wonder what's been all this euphoria in stock markets. And it has been a little bit that freedom of pricing and the detachment of tech stocks from other sectors. I do think the US and Australian stock markets are fully priced at this point. And I'd be watching, sort of support around 7,400 for the AUS 200. That needs to hold for the bulls to maintain their argument. I'm just seeing an economic reality that isn't the nirvana that many economists were speaking of.
Got it. Clifford, look, we'll pick up the conversation at a later date. Thank you so much.
Thanks very much.